Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today.
Good morning from our studios in Amsterdam. I'm honored and thrilled to have one of the really true champions of the sustainability space who has been, to paraphrase Walt Whitman, who's been shouting his barbaric yawp over the rooftops of the world for years. But before I do that, just for some housekeeping explanation for those who haven't joined us before, if you need to ask a question or pose something, just write it in the chat. There are 3 emojis at the bottom you can use to clap or laugh or say something that's brilliant. And if you want to send a private message to someone, just move your mouse over the person's name in the column where the people's names are there, and a private message will pop up and you can send them that. So thank you all for coming. Sean, thank you so much, because I know how busy you are, because you are now the ultimate flavor of the month. Climate bonds and green bonds and sustainability and the EU Taxonomy. So for those who actually live on a different planet and don't know who you are and who is climate bonds, tell a little bit about yourself and the work that you do and what you're trying to accomplish.
Gee, what an intro from a legend in his own time, Robert Rubinstein. I have to say, goodness. So, Robert, I run an NGO, the global NGO for green bonds, essentially. Although, as you would know, green bonds are not the end. Green bonds are the means. So what we're about is mobilizing global capital for climate action. There's a lot of things that means. At first glance, it means, how do we get capital shifting towards solutions? Hey, we've got a big challenge. I think you all know that. Let's frame it in terms of capital. We've got to invest about $90 trillion of capital in climate solutions between now and 2050. Actually, we've got capital in spades. We are flooded with capital. No shortage whatsoever. Large slabs of that capital is in negative interest rate or zero interest rate bonds, which is no way to pay your pension, Rob, when you finally get around to retire in 2045. So we've got to work on putting this money to work. Luckily, we have a problem, which is climate change, where the solution happens to lie largely, not only, but largely in building green and resilient cities, clean transport, clean energy. There's a large CapEx challenge ahead of us, if you like, and we can engineer it, as we have engineered infrastructure for the last 150 years, to be profitable. So that's what we're on about. Of course, the other aspect of mobilizing global capital for climate action is a different one. We don't actually change the world now with markets. We don't actually change the world now by getting banks and investors to do deals. We need that. That's a prerequisite. We change the world now, 50% cuts by 2030 minimum, global average. Note that the US today committed to 50% cuts by 2030. Europe yesterday committed to 55% cuts by 2030. We do that with strong state action. We do that with governments making activist decisions. Right, we can no longer build any gas because every gas plant you build now works against your target, according to the modelers, according to the scientists, not me, etc. We now have to rapidly shift to EVs. We need to make sure zero carbon buildings are the norm in our cities. Actually, we need to build sustainable cities all around the world, especially in emerging markets, where the bulk of capex will be in the next 30 years. 70% of infrastructure capex is in emerging markets, and it's got to be green. So what we need to do is to bring global capital as a force for change with governments to push them in the direction that will deliver sustainable investments that global capital can invest in. We want the governor of Lagos, he's a great guy, by the way, to be able to build 60 subway lines, not the one light rail that he currently has. And we can do it in a way that international investors and domestic investors will invest and build it. It won't need to be the state. And that's the real challenge here. Now, what we've done is we've proven that investors will invest through green bonds. We've got about $1.2 trillion of green bonds globally, and it's growing like a rocket. It'll go up 50% this year, I think, in scale. So, it's a reasonable sized market. And we've got a long way to go, but it's proof that if you bring these investments to the table in an appropriately risk yield format, hey, we still deal with risk, right? The investors will go for it. The oversubscription rates in green bonds are way over the oversubscription rates in ordinary bonds. The Italian government, not the most popular bond issuer over the last 20 years, when it bought out its green bond, it was 10 times oversubscribed, 10 times more investors than bonds. They placed 8.5 billion euros. They want to do more fast. So, this is it's a pretty exciting story. So what we do is we work on this story, the narrative I'm talking to you about, what it means for investors. We have about $30 trillion of investors in our Climate Bonds Partner Program looking to grow green assets. We work with banks like HSBC or Barclays or Citi on what they can do to grow the green pipeline. We work with governments across ASEAN, in Latin America, in Europe, in China, on policy settings to grow green finance, to channel money. And lately, as in yesterday, we work and deliver on taxonomy. So yesterday, the European Union published the European Taxonomy of Sustainable Finance, which is going to be governing disclosure under the Sustainable Finance Regulatory Directive or Directive in Europe. All corporations, investors, and eventually banks will need to report annually on their sustainable investments as per the taxonomy. The taxonomy, we created one 8 years ago to drive governance in the green bond market towards quality, that is Paris 1.5 degree investments. That's what we call rigor and quality, and it's worked. In 2015, we managed to convince the Chinese government to do one to govern their green bond market, now the world's second biggest, and they published an update yesterday to coincide with the European one, to come out the day before the Biden summit. And the European one we've been working on for some years now in various expert committees to now come out. Now, we're also supporting the European Commission on harmonizing between the China and the European taxonomy. And the reason why the Chinese Central Bank published their taxonomy yesterday was to make the point to global markets. Europe and China are working collaboratively on a common language for what we have to do to deliver the Paris climate change agreement. That's what we're doing. That's what the green bonds is really about.
Thank you. You're a bit modest. 'Cause I was looking at your bio, and you actually started in comics. So you're kind of
look, I'm very old, Robert.
Yeah, that was a long time ago.
No, you're right. I started being a car park attendant when I was 17.
But you also have a reputation of speaking the radical truth and telling companies and banks when they were issuing green bonds, when they were kind of dubious about that, you would always focus on the truth, so much so that my former partner was always reluctant for me to ever invite you because she was such a corporate clone. And then, oh no, we can't have Sean. He's going to embarrass it. So it's because what you do basically is you tell people, I'm sorry, but your children are ugly. And you do it for the best of intentions. But at the same time, you're a member association and you got to keep the members on board. And they're not all at the same level. Some are, still on their journey towards sustainability. How do you keep the radical truth and at the same time try to keep everybody on board?
Look, we're not a member association, just to be clear.
Oh, my apologies.
We're an NGO, a charity registered in the UK. If you want to make a donation, give me a call. I need help every day of the week. But we do have a partnership program, which are organisations that make a very clear commitment to addressing climate change and want to grow sustainable finance, and we want to work with them. And we've got a lot of these, 100 and something around the world. Yeah. So that's how we work, right? So that means we might run a program with Credit Suisse, as we did last year, to bring out a thought leadership piece called Financing Credible Transitions. Mm-hmm. We published that in September. That's been very influential globally. And we're doing a lot more work on that, including with Credit Suisse this year. So that's how we work in partnerships with different parties. Or with State Street Global, we're working with them on how to grow climate fixed income investments, as we are with BlackRock, as we are with Fidelity, as we are with other major investors. So our goal is not to call people out. That's not our job. Our job is to help people go in the right direction. But yeah, every so often, if something's done which is not consistent with where we need to go, we will put the argument. When Bank of China issued a transition bond in January, 1.1 billion, and 3/4 of the money was going towards gas plants, and they said it was consistent with the EU Taxonomy and the ICMA Green Bond Handbook. We begged to differ. We said, actually, we drafted the EU Taxonomy. It's not consistent. There's electricity part, one. And two is the ICMA Green Bond, or rather Transition Bond Handbook, says we need to be consistent with 1.5 trajectory. The IPCC and the IEA both said in 2018, no new fossil fuels if you want to achieve 1.5. Nada. They can't be. Doesn't match. That's what we say. So we have a discourse about it. Great they were transparent. Great they said, but we don't think the claims are consistent with what's actually being talked about in the areas they're claiming to be consistent with. And that's the sort of discussion we'll have.
Can you give us what is the status now? Because there were some press releases coming out regarding the EU taxonomy that the lobbyists were basically forcing the EU to become less science-based and more kind of finance-friendly to allow things, in the club. What is the status now?
Politics is fun, isn't it? We live in a robust democracy in Europe.
Yeah.
And of course, people argue. The win is that we've managed to get everyone to argue, am I consistent at 1.5 degrees or not? And there's a lot of boundary issues. There's a lot of boundary grey areas, let's face it. And so that argument is what counts. And when we're looking at NDCs, National Climate Change Plans under the UNFCCC progress, that's not the discussion we've been having. People have not been saying, is my climate change plan consistent with 1.5 degree? They've been saying, this is what we can do in our country towards it. And if you add up all the climate change plans that have been submitted to the UNFCCC, we would get 3.5 degrees warming if they're all implemented. And they're flaky. So, that's something that we needed to fix. And we have done that now. So in every country I go to, and there are about 20 countries working on taxonomies, thanks to the European Union's igniting of this issue, the question is the same. Well, actually, I think this is consistent with the 1.5 degree trajectory, not what the Climate Change Ministry has been told to do for the last 20 years by the Ministry of Finance. That's all very well, guys, but look, just tone that back, would you? We can't have it too difficult because of this. So we changed the terms of debate. That's an incredible win. Some of those arguments are still raging. Yes, the gas industry was upset. Hey, what do you expect? What we are doing is starting off something which hasn't been done at a government level yet. We're mapping out the implementation of Europe's new 2030 commitment. Remember, the DG Energy and various other ministries are currently looking at what the policy changes are to meet this commitment, which was only adopted early this week, formally, even though it's been talked about for the last 6 months. No member state has yet revised their climate change plan to be consistent with the European 2030 commitment. Only 10 years. And this question about gas is squarely in the middle of that. Most member states, most countries have gas as part of their transition plan. I remember sitting through a presentation a couple of years ago at an OECD event by the Israeli Minister of Climate Change and Environment. We're doing this. We're going to shut down our coal. It's fantastic. We're going to replace it with gas plants. Sorry? Are you doing much solar? No, it's all going to be replacing with gas plants because they've got to be gas fired. But sorry, the IPCC report that just came out a couple of months ago said no new gas can work. And therein lies the arguments that are going on in Europe. And yes, lobbyists have been at play because we're trying to change embedded capex plans by utilities. And they're a bit freaked. They think they're going to have to blow money, lose money. Now, that's, of course, DG Energy enabling policy in Europe to fix that out. But it's understandable why there's an argument. But, of course, from a science perspective, it's very clear what we have to do. And the taxonomy that came out yesterday holds true to the technical expert group recommendation of a year ago for a 100-gram threshold, which excludes unabated gas. The Commission has said they're going to keep a discussion going because member states want it, and we'll look at it again in question 4. So it's not over yet. It's kicked off. That's fine by me. So far, so good. In the forestry area, in the bioenergy area, we've got some weakened criteria. We've got to work on it. Not a lot of capex in that. It's a few people. But nevertheless, we still need the right criteria. Agriculture has been delayed because no consensus can be built. We've got to fight these on a science ground. But at least everyone's having the debate from a science perspective, am I in or not? Not whether it's good for my country, which has often been happening before. So I'm pretty happy with the taxonomy that came out yesterday. It's imperfect. It will continue to be upgraded. There's a whole apparatus around doing that. And we will need to win some fights later this year around what gas is. But, we've got some learnings, right? We're learning right now about the extraordinary fugitive emissions problem from gas. We've got LNG gas plants around the world that have a footprint the same as coal. That's not good once you count the leaked emissions across the pipeline, which you've got to in gas, because you have a 3% leakage. That's how you're as bad as a coal plant. And we see a lot of 3% leakage. Europe has invested in methane sat, which is a new venture to track methane around the world from satellites. That'll help us. We've got to do some work in this area. Last year, we had a pandemic. Brutal, ugly. Well, it's not over yet, unfortunately. It's still going. So we're beginning to get better with vaccine rollout. If there's one thing I hope we've learned from the pandemic, listen to the scientists and act quickly. Hey, that sounds like exactly the lesson that we have to learn around climate change. And I think we have a shot at winning that now, thanks to a pretty progressive European government. Ursula von der Leyen, Franz Timmermans have been saying all the right things. To Biden and his new team saying all the right things. And Xi Jinping and the Chinese party who are saying all the right things. They've got their own internal fight. Let me give you a flavour of that little fight. We had a lot of stories last year in the stimulus packages of the Chinese government about coal-fired power stations being built. Everyone's saying, see, China's a mess, blah, blah, blah. But, of course, that's because the provinces were given rights to just go ahead and they used what they'd done before. Let's just build a coal-fired power station. Everyone knows that's a good thing, right? Not for central government policy. The banking authority has been trying to squeeze lending to coal, et cetera, et cetera. So the National Energy Agency, the body in charge of licensing energy generation in China, approved all these coal-fired power stations last year. At the end of last year, the State Council of China, the cabinet effectively, decided to launch an inquiry into what had gone on. That report got released in January, very unusually in China. The report, which is essentially the Chinese cabinet's report, says that the National Energy Agency executive made grievous errors in approving coal-fired power stations in China last year, one. Two, that many, if not most, of those coal-fired power stations that were in construction should be stopped and dismantled. And then three, that the executives of the National Energy Agency, this is China's national energy regulator, had erred in not following Xi Jinping thought. They're getting desk jobs somewhere in some province. That's the nature of the fight that's going on in China between the centre and the provinces. So just like Europe, the Commission is having an argument with member states. Oh, China's no different. And the key thing is that at the centre, in China, Europe, the US, and now Japan, by the way, where the Prime Minister's office leaked their new look at a 50% reduction in emissions, which we may even get an announcement later today about, by 2030, we have the centre now pushing it, and now the ministries and the provinces have to figure out how they're going to do it. So this is an enormous change. This is listening to the science. I'm going to call this a listening from the pandemic.
Do you think there will be a broad carbon tax to really kind of finally put a price? I mean, it's ridiculous. You have a bicycle, 21%, 25% VAT. You have an airplane ticket, no VAT, no tax on kerosene. So do you think there will be a broad embracing of a carbon tax?
There's a reason why there's no tax on kerosene for aviation. In the Bretton Woods Agreement after World War II,
I know
there was an argument that we needed to have more travel to stop wars. The more we could have people go to different places, the less likely they were to try and agree to kill each other. I think there's some truth to that. I'm a big fan of travel between countries, and I think we need to be careful of where we bring in taxes and how we do it, because we are in a century that's getting worse of extreme volatility. Peace will be at a premium. We need to do everything we can to fight the increasing scourge of war, which will be around because every few years, thanks to an extremely volatile climate and economy and pandemics that will become the norm as a result of climate change, a populist is going to get into power and there's going to be a risk. Let's call it a Trumpian or a Marine Le Pen, God forgive, who's doing well on the polls in France. Risk of conflict between countries, let alone an Erdogan or whatever, as we've already seen, in a collapse in Syria. So I think we've got to be careful what we do, one. Two, I would say, do we build bridges with taxes and tax changes? No, we don't. We decide a bridge has got to be built and then we figure out the right financing for it for other reasons. That's what we have to do with climate change. Sure, a carbon tax would be useful, would be great. A global carbon price would be great. Pigs will fly before we have that in place. In the meantime, let's get on with what we know works, which we've been doing for 150 years in Western countries, making decisions about infrastructure we need and just building the damn stuff and working out the financing. Either the state finances it in some countries, or we do PPPs, or we license tollways. We've got 1,000,001 ways of building the necessary infrastructure. And that's what the taxonomy is. The taxonomy is a shopping list for the future. You can run through the taxonomy. In every area, there's a simple way of getting it financed. And there's a simple option to ban stuff that's not in that taxonomy, which will make the financing a damn sight easier because you remove competition. In the same way in Europe, we remove competition from LED light bulbs by banning incandescent light bulbs. More of that, please. And that, there's many ways to skin a cat, as we like to say in Australian slang. And here, there are many ways of achieving objectives. A carbon price is just one of them.
Okay.
And it's a slow burn one, unless you whack a decent price on. We are unlikely to get dramatic changes to our societies till we have a carbon price of $100, some say $600 a tonne. Well, we're getting there in Europe, but we've got a way to go yet. So let's do it, by all means. But hey, do not treat it like a silver bullet. 10 years ago, I had dinner with the chief economist of the European Investment Bank. Classically trained economist, orthodox economist. He banged the table at me and he said, all this stuff about green bonds and green infrastructure, waste of time. All we need is a carbon price. All we need is a carbon tax across the world. I said, good luck with that. But one, there is, whilst it's elegant in the economic models, and introduction of a carbon price and carbon tax looks like it's a fuse and magically if price signals, things will change. Rational, right? Should be right. We now know that economies are not rational, that we make stupid decisions day in, day out, like we did in 2010 in Greece and Europe. Stupid decisions, like we did in the ABS, the asset-backed security craze in the US in 2006 and 2007, and as we continue to do in all sorts of different ways. Economics is not so beautifully rational. So let's bring in the rational ideas, but let's just keep an eye on what we've got to do and work backwards and look to history. What's worked before? How did we build those bridges again? How did we do that? There you go. There's my line.
There's a lot of announcements of 50% reduction by 2030, 100% by this, but these are aspirational statements. They sound really good. You know, I always wanted to be a ski bum, and I'm still doing what I'm doing. So you can have an aspirational statement. You've got now, starting in December, net zero asset management, committed to 50% by 2030. What if they don't hit it? You know, what if this is just a nice statement to keep people quiet? How do we know that we're actually going to hit this?
You know, it's a good question. We're currently working on frameworks for assessing, for certifying transition strategies by companies and governments.
Mm-hmm.
Now, what that will involve is a credible pathway commensurate with the ambition we need to get to achieve the 2030 targets and the 1.5 degree trajectory, one. And two, it'll then require granular detail, a plan, CapEx plans, and then it'll require annual reporting and confirmation. That's how we do it. We're doing this already at Green Bonds. We've established the idea. We can now do this with corporate strategies. And we've got plenty of corporations who want to be able to show what they're doing and are happy to talk to investors. And more importantly, way more importantly, I've got a lot of investors who want this now, who are looking for frameworks to make the assessment and do it. And, you know, transparency with annual scrutiny, we've got a chance. Nothing's foolproof. But, Jesus, we need momentum in direction, and this will give us some momentum. And let's keep working on it as we go along. Let's just forget about the silver bullet solutions. We want them. We work on them, like silver carbon taxes. It's just not a silver bullet. It's one of a panoply of solutions.
How does the EU Taxonomy or the work that you do address one of the biggest elephants in the room, the whole issue of stranded assets? If I take one industry, cement, okay? Cement is carbon intensive, where there's been a technology that has zero CO2 emissions, geopolymer cement that uses waste material, fly ash, slag, salt water. But hey, I'm Lafarge, you're my banker. I say, hey, Sean, I'm going to get rid of all my CO2 emissions, but I got to shut down 45 quarries because we're going to switch to this. So I need you to write down $12 billion that you lent me. And I need another $3 billion for the others. So you can imagine what the bankers say. That's a clear example of a stranded asset. There's a technology that would be much better. but it's not being embraced because of investment. And who's going to eat that? Who's going to eat that?
Lafarge is selling a low-carbon cement in Belgium. They're trying to sell it. It's not bad. It would meet, I think, the European taxonomy threshold, which requires significant improvements in the emissions threshold through a variety of means in cement. They haven't had any buyers. Why? Because they're charging 10% more.
Okay.
Why are they charging 10% more?
Wow.
Because it's a niche product, and this is a low-margin industry at that end of it, and it's not being on-sold to the property developers that they can use their marketing. It's the cement buyers, and they run on the smell of an oil rag. They don't make much money. So a 10% increase is actually quite a lot for them, and they go for the cheaper one. So how do you drive markets? Hey, there's price everywhere. Well, you know what? It's not that hard to drive markets, actually. You build it on the demand side. You don't deal with it on supply. So the taxonomy is not a solution to everything. The taxonomy is a description of qualifying investments. In the cement sector, it's a trajectory of change. We're saying you start at X, which is pretty efficient, and then the threshold is going to get tougher and tougher and tougher. So you make some money initially. By 2050, we want really zero carbon cement to be the norm. And then, next step, it has to be linked to some other measures. Demand. Biden has just decided that the federal government will now buy electric cars. Well, that was simple, wasn't it? Whoa, rocket science. Did you know that DG Environment is in a building that is not very energy efficient? It's only marginally so. Let's get that side of things right. The member state governments, the governments of the world can simply be saying, if they're activists, all our buildings have to be super energy efficient within 2 years. If not, you lose the lease. Now, a silly little secret, if you're a property owner, about government clients, they are gold dust because they always pay the rent. They don't go bankrupt because they can slug the taxpayer if they need to. So they are the gold dust client, which means every man and the dog that owns a building starts retrofitting and improving the efficiency to meet the standards, hoping they'll beat their competitor down the road. There are things like that we can do. And we could simply say all new buildings have to have very low or concrete that meets the taxonomy. If they don't, they can't. All new freeways, again, public expenditure. And what a revolution we would see so quickly. We have the powers. We have the levers around. We just got to use them. And I think this year we'll start using them.
You're very optimistic, even though I'm sure when you started climate bonds over 10 years ago, 11 years ago, it was a hard slog. Everybody in Asia, when I come give a roadshow, they always think it was so easy when we started 25 years ago trying to change the behavior. And I always tell them the story of the Dutch insurance industry. They asked me to come give a talk on climate risk for the Dutch insurance industry. So I said, I'm a very practical guy. I'm from Brooklyn. So I said, you're a country below sea level. Sea levels are going to rise. I'd be concerned. So you know what they said to me? It's not a problem for us if sea level rises. We don't cover saltwater damage. So I said to them, yes, that's true, but you give mortgages. So if lots of homes are underwater that are worth it, you have a problem. Then they understood that. So I'm sure that you face the same thing in trying to get these big financial behemoths to embrace this. And how did you stay so positive? Okay, you have some wind in your sail now, but it wasn't like that 11 years ago.
Look, I had a strategy, and the strategy is playing out. The strategy was to mobilize asset owners as a force for change. I mentioned it earlier. We want them to shift their money, asset allocation, but the goal has always been to say within your existing risk yield requirements, we're going to give you opportunities to get a bonus feature. That is, you will be able to get investments that also address your long-term anxiety around climate risk. Play the violin for a while, make them work on that, which is, of course, what we did along with many other groups. And that's worked. That's what a green bond is. It's growing. On the back of that has been a lot more engagement. Oh, we can do it. There is something we can do. Wow, I have no idea. Let's do more of it. What else can we do? And that's where we are now. So now I have investors telling me, so how do we pick governments that are doing a good job and not doing a good job, and maybe shut down our investments to the bad governments? And shit, that's a good question. For risk, it's all about risk, right? Those governments that are doing something are probably more likely to survive. And that's fueled all sorts of things, bond investments and other kinds of investments as well. From a government perspective, signalling they're doing something, this is a sovereign green bonds market, has been incredibly attractive at getting new investors to their books and sometimes driving the price of bonds down. The Dutch government, by the way, has issued a whack of green bonds, certified climate bonds, in fact, to finance, would you believe, coastal protection in the context of rising sea levels. They learned from you, Robert. They learned. So it's a long-term discussion about risk. I had a very clear 20-year plan, and it's working. And the next stage is how you get the investment community hammering around governments, and that's what we'll see next year. But some of the governments, in the meantime, are moving anyway, such as the European government and the US government. So there's more to it before we reach the end of the game. But I would say it's not going fast enough. I had hoped there would have been $1 billion a year issuance by now. That was my plan. Well, this year will be at about 400, maybe even 500 billion. Not good enough. We need to be at the 3 to 4 billion a year issuance. And that's labelled green and stuff that we know is green that no one labels it. But we just know, like investments in railways, which we do analysis of as well. And, so we've got a way to go, unfortunately. From a science perspective, a rational perspective, it's grim. It's grim. I worry about my kids. I think we only have about a 50% chance of averting catastrophic climate change. Catastrophic climate change is where we get 3-4 degrees and then it skyrockets to 6 or 8 degrees and the poles melt, and mainly we get pandemics sweeping the planet, wars, populist leaders like Trump running the country to the ground, that sort of stuff. And that's, I would say, if you looked at the trajectory of the last 30 years, that's where we're going, very clearly. I remain optimistic because actually it's still a 50% chance, not a 2% chance. One. Two is we've got the money. I mean, we've got more capital on the planet than before in history. That's around. Kind of know what to do. You just got to put these things together, right? So when you think like that, you think it looks possible. And if we just get a few good models, everyone can copy. And that's where I think we are, I have to say. So I continue to remain optimistic. And then I had another note, because, the science keeps worrying. You look at the science, you go, oh, God, no, stop giving me a migraine. Go away. I spoke to the guy who runs, I think, of the Global Carbon Project, which is an association of climate scientists around the world doing modelling, last week. And I check in occasionally with the science community. And I'd been supporting the Climate Council's report in Australia last week, which is a bit like the UK Climate Change Committee. And he said, actually, the truth is feedback loops haven't started cutting in yet. Yes, there's risk. There's methane leaking in the Arctic and ice shelves breaking up in the Antarctica and stuff like that. It's looking bad, but they're still relatively minor. Most of the emissions we see in the global modelling are human-induced. So it's energy emissions, it's transport emissions, and of course it's forest destruction, tropical zones, and land use issues. And they're all addressable. We can fix those quite quickly if we get our act together. And that fills me with hope because, I remain extraordinarily persistently optimistic that we can figure out how to shove our heads around in the right direction and start walking differently. I don't think it's getting rational, by the way. I'm not suggesting it's getting rational. But we have a lot of tools now for how to shift the planet. In fact, I mentioned Trump. We can learn a lot from Trump. Look at how he managed to convince 70 million people to vote for him. Got to learn something from that, for goodness sake. We've got to use all the arts available to us, and I actually think we've got a reasonable chance. But I'm going to say it's only a reasonable chance. So we've all got to work on this.
I'm going to take some questions. Rohit had a question for you. Are green bonds heavily weighted toward renewable energy?
No.
To what extent? No. Okay. To what extent have they drifted towards WIE or WTE?
We're publishing later this week next week our sustainable bonds report for 2020. Tons of data. If you go to our website, you can join the webinar and log and so on. But renewables would be, I think about 25% in one form or another, or energy, I should say, of all sorts. Transport is a big chunk. Buildings are a big chunk, green buildings. But there's also bonds for water, some land use, not a big capex, yet some manufacturing coming through. It's pretty heterogeneous, as we would have hoped. So there's a lot of stuff in there. Someone also asked a question about natural capital. The challenge about natural capital and agriculture and land use solutions is this tiny capex. So it's hard to weave it into a small bond market. But as the bond market grows, opportunities grow. And we now have proposals floating around to set up sovereign wealth funds that will issue green bonds to invest in land use restoration in a couple of countries. In Brazil, the minute we signed an MOU with the Ministry of Agriculture, yes, even while Bolsonaro is there, to grow green bonds for sustainable agriculture in Brazil using our international standards that are consistent, the European draft standards we recommended last year. So there's stuff happening, but it's small capex area, and there are some things that we're not going to be able to deal with through instruments like avoided deforestation. Now, it's still a big problem. We've got Malaysian logging companies in the Congo chopping down the forest that's got to be saved. We've got to try and get lots of money and write off 10% of corruption. Okay, that's life in the Congo. So we can keep those forests. So we've still got to figure out some solutions there, which won't be green bonds. They'll be governance funded by rich countries or subsidized rich countries. So don't get me wrong. This is not everything. This is a big piece of the puzzle that unlocks other pieces rather than an end. I said right at the beginning, it's a means, not an end.
Albert wanted to know, he was saying, it seems to me that green bonds are only accessible to large billions industry or governments, but true innovation comes from small companies. How can they access and benefit from the green bond capital market?
Actually, it's not true that true innovation only comes from small companies, I'm afraid. Yes, a lot of innovation comes from small companies. A lot of innovation comes from big companies. You know, the Post-it note was invented by 3M when it was already a big multinational, for example. So it's a variety. The first thing. Second thing is big companies do distribution. So the way technology change happens is not through R&D by small companies. That's a part of the mix. In solar, we didn't get solar dropping in price because we had a whole lot of great R&D from small companies. I know because half the R&D in the world in solar came out of the University of New South Wales Solar Research Centre nearby where I am today. But they couldn't commercialise any of it in Australia. It was only when volume procurement of solar took off that demand for their R&D grew, and then they sold patents to US and Chinese companies. So actually, engineering volume demand, which can be done by standard setting, mobile phones grew because Europe adopted a European-wide standard called GSM many years ago, and out of all of that, a whole lot of companies could compete with a level playing field, which hadn't been happening in the US, where they hadn't adopted that standard, and it was the European mobile phone industry that went whoosh, and Nokia was born at that stage. That's one thing you can do. The second thing is you can be looking at procurement plans, like I mentioned earlier, specifying a kind of concrete. Volume procurement. You will suck in all sorts of ideas for zero carbon concrete, not just the one you were talking about, Robert. In solar, it was the German Greens in government in 2001 who pushed through a feed-in tariff that led to large-scale procurement of wind and solar, and the price started plummeting. And then the Chinese government in 2006 adopted an aggressive policy of growing solar and wind, large-scale contracts at an expensive price. They did it for air pollution, energy security. Who wants to import oil from the Straits of Malacca when the US 7th Fleet can blockade at any time you like? And current account deficit benefit, and massive procurement meant a whole lot of industrial production gravitated to China. The cost dropped, and the cost is still dropping. Like a few weeks ago in Saudi, a solar auction came in 23% last year's price, which is already a record price. And they're doing it because Germany and China drove down the price and then sucked in R&D and small companies. So you don't necessarily have to fund the small companies. You've got to engineer the volume procurement. In hydrogen, which we have to get green hydrogen down by tenfold by 2030, which we will do, by the way, which will be game over for gas at that point. Why would you buy gas if you can buy for a cheaper price green hydrogen? Get real. So, don't invest in gas long term. We're going to do this by engineering volume procurement because we now see the elements in place. Get some big contracts, the electrolyzer cost drops whoosh like a stone. Get some big contracts, the volume production facilities in Saudi and Australia and Morocco get built. So that's why we need big in these areas. And yes, big bonds will help them. But of course, about a quarter of the green bonds issued globally are issued by financial institutions, by banks. They are what you would call aggregators, because they're the ones who lend to small business. Small business doesn't get its financing from bonds. Small business gets its funding from equity and bank loans or other kinds of loans. The big institutions, if they can refinance at preferential rate, this green stuff, then grow their green lending programs. Barclays, for example, has issued, I think, a couple of $1 billion of green property bonds now, and they've passed on the fruits of that, a 25 basis points discount on mortgages in the UK to qualifying mortgages. Now, that can work in every sector. It will work in every sector. So don't be fooled by the big bond market. Bonds are a piece of the capital stack. Yes, they need to be big. Doesn't mean that there aren't smaller institutions getting benefit in different ways as a result of this change.
Beata wanted to know, what do you think the UK and Mark Carney Glasgow Alliance can do better, moving faster with RE, heat pumps, EV, solar subsidies, etc.?
Look, they just want green investments. And they want governments to enable green investments, a bit like improving the building regulations around concrete. And they will, we hope, aggressively say this to governments and push them around. I wanted to bully governments. Do you remember the great James Carville quote from 1992 presidential election? When I come back, I want to come back as the bond market, because then I can bully everyone. Everyone's scared of me. Well, I want everyone to be scared of the green bond market. And if they don't do what the green bond market says, which is, by the way, what the taxonomy says, Paris climate change green investments, then I want them to suffer. I want them to have trouble raising money or to have to pay extra, an impost for the cost of wholesale funds. And if they do the right thing, for risk reasons, right, by the way, this will reduce the forward risk of transition. It'll make them a safer investment for investors. Then they should get preferential rates, and they are already now getting preferential rates.
Aaron wanted to know, how can you prevent disenfranchisement from those stakeholders who are involved in the old energy, like oil, gas, and coal? Is some reskilling needed for these workers?
I did a workshop in Copenhagen a couple of years ago, before COVID, the old days, with the moderator was the longtime CEO of Ørsted, which used to be a coal company in the old days.
Yeah. And
he engineered a radical shift 10 years ago to becoming, which it is now, a wind energy and renewable energy company. Ørsted surpassed the capitalisation of BP on the London Stock Exchange earlier last year, or middle of last year. That's what you call successful value creation. The BP share price, on the other hand, has seen successful value destruction because of poor management decisions about getting ahead of changes in life. That's capitalism. So when it comes down to the companies involved, I'm not that fussed. Let's treat the work differently for a minute, okay? But for the companies involved, I'm trying to say to them now, look, if you're not transitioning, then you are risking your shareholder funds. And I'm saying to the investors this, by the way, as well. Let's look at what a transition looks like by all means. But guys, get with the program. Shit is happening fast. Take electric vehicles. We are all going to be buying electric vehicles in 2 years because they're cheaper, CapEx. They're already cheaper, OpEx. I drove a Hyundai electric the other day, 500-kilometre range. That was last year's model. And I'm thinking, why not? And, you know, this is going to change fast. Why, by the way? Because of Chinese government action. It's driving the change for the reasons I mentioned before. It's not Tesla, it's China that's driving the change. And we're all going to reap the benefits of it, do it. So if you're investing in a company that isn't ahead of this, that's what's called a bad investment. You are not looking at the macro indicators. I can name a few companies if you want, but I'll leave that to you guys to guess. If you're investing in a company that is making the transition, you've got a shot. You might be able to make money out of all of this. The taxonomy represents the pool of investments that are likely to benefit. They are less at risk of negative policy action and more likely to benefit from positive policy action. It's a low-risk universe. There's your clue. That's where you look. So, you know, stranded assets, yeah. But, you know, there's a lot of gas plants being built this year when the IPCC report came out in 2018. And if you had 2 cents of intelligence, you would have realised this stuff is changing. So I'm not that sympathetic, Robert.
Okay.
But I want to say for workers, I'm really sympathetic. And for assets, this year, unlike in previous years, the shape of the future is certain. I don't get anyone who disputes we're going to be clean and green. It's now all about the speed of the change. So we now know there's going to be a lot of, not stranded assets, decommissioned assets. Have any companies budgeted in their capital reserves to decommission those assets? No. In the UK, it's the UK government picking up the oil industry decommissioning costs in the North Sea, UK government. And that's the same in every country of the world. Let's hasten the change by forcing this. And then let's have a proper retraining scheme for the workers, which is part of what a just transition policy of every government should be.
I'm very sensitive to your schedule because I know there's a hard break at 4 o'clock CET time. What can this audience that's listening to you now live and those that will listen to the replay do to help you?
We're a charity. If you want to fund, 2, we've got a partnership program. You get data, you get information, you get training. You pay a tiny subscription. We're trying to rope as many people around the world into the program. Okay. And we run green bonds training programs all the time, which you can just sign up for. So that's the next thing you can do. But the most important thing you can do is to look in your own institution about how to achieve the change, what the business plan going forward is, and to look to the institutions you either invest in or relate to about how the change. Every citizen needs to be considering how we're going to change things. If you're an ordinary voter working in a shop in Frankfurt, you need to be thinking about your government. Are they being aggressive enough? There's an election coming up in Germany, folks. Think about this issue. Are we leading by example or are we flapping around? That's something we can do. Secondly, are the things that we're investing in leading by example? Now, don't get me wrong. I do not believe that eating less meat will save the planet. You might, for an ethical reason, decide to reduce your meat consumption. That's fine. What I'm interested in is systemic solutions I'm interested in solutions with more lab meat or impossible burgers. And that applies to travel, that applies to energy, that applies to buildings. Systemic solutions and how governments and major companies drive them is what this game is about. Everything else is good for morality, but not good for real change. So exercise your mind in how you can contribute to that sort of thing. But in the meantime, if you could do a bond, hey, you could probably do a green bond. Come and have a chat. We'll work out something.
Final question. Did they give you a special seat at the meeting this week with Biden and Xi Jinping? Are you allowed to join them?
It's a government leaders meeting, Robert.
Okay.
I'm sitting out here doing my work to contribute to that agenda. But we need the government leaders to do the handshake deals on targets, and then we will help them figure out, as we are already, how to do it. Because as you said earlier, they're targets, they're not solutions.
Right.
But, we need the rhetoric, right? We need the targets. We've learned how important the right rhetoric is in 4 years of Trump in the US. It can skew a whole country if you've got the wrong rhetoric. So this rhetoric is really important. And then the rest of us have to actually show how to do the job and get it done, and then keep them honest.
Okay. I'm going to take a group selfie for everyone. So when the camera comes your way, just wave and take a photo of yourself. And then I will send everyone the link for the replay and then a copy of the photo. I really am very, very grateful for Sean to have taken all of this time and all of this commitment. I want to thank our entire team, Sam, our producer, Crypto Genius, and Ramen Critic, Ricky, my absolute better half with no filter, Xi Jinping, our head of transparency and integrity, the Myanmar generals, our power-sharing advisors, Vladimir Putin, head of conflict resolution, Jeff Bezos, our human resources and full tax compliance leader, Ted Cruz, our sedition expert and humility mentor, Marjorie Taylor Greene, our astronomer specializing on Jewish lasers, and Elon Musk, our humility coach. So thank you all very, very much, and I hope to see you all next week. Sean, thank you so much for taking the time. I really appreciate it, and congratulations.
It's been wonderful, Robert.
Thank you.
Good luck. Thank you.